Hi guys, welcome to this week's episode of Global News Review. This is a very different from the normal one. I'm at an event. If you're in Lagos, Stanbic is having their Bloom event today. And I'm speaking there. So if you're in the area, you can pop in and let's connect. Yes, I have to do this quickly before I run into the event, which has already started. Um, and then of course my voice, you can tell that my voice, a lot is happening at the same time, but we move. So we'll run through quickly. And if this is your first time, please say hi. I can see people joining the session. Please say hi. We do this every Saturday morning, 9 a.m. West African time. And the replays obviously are always available on YouTube. It's basically talking about the economy and how it affects your pockets, picking out the news that you hear and breaking it down to explain how it affects you and what you could possibly be doing. So we'll start with global news, right? So Netflix just signed a deal with French television network TF1, and basically what they're doing is let me even give a background. 2 weeks ago or so, we talked about Disney, Discovery splitting into their streaming and then their traditional network. And we were talking about the fact that there is a cord-cutting trend where a lot of people are transitioning from regular TV to like regular TV, like DSTV, satellite, or is it satellite? Cable, not satellite, cable. And they're moving to streaming. So their TV connections are backed by the internet. Now, what's happening is that Netflix just signed a deal with a TV network. So it's really like the reason why we're highlighting it is just for us to really recognize the trend in terms of investing, because we talked about Disney and saying, okay, there was going to be one part that would be traditional TV. And the question then was, are we sure that they're not splitting the good egg from the bad egg so that the bad egg can die naturally without impacting the good egg? And it sort of seems like that could be the trend or could be the strategy. Because in this situation, a TV station is actually partnering with the Netflix that we know and is going to be streaming, right? And that's just showing how things are changing before us. So that if somebody comes to you saying they want to start a TV station, you'll be asking, what's the game? Do you understand? That's why we had to bring that in. Now, the second news kind of sounds like Nigerian news, but it's actually global. And it speaks to people that are outside of the country, outside of Nigeria, that would have wanted to access Nigerian bonds because the yields are so high, but they don't know how to, and they don't want to convert to Naira, right? So, being NY Mellon and Standard Bank are creating like a structured product that is backed by Nigerian debt, such that you would get a higher yield than your local. So if you're in America, you know that, for example, the 10-year bond is hovering between 3 and 4% ish, right? And then you want to do 10-year in Nigeria is like maybe 19%. Do you get? So what they'll do is like you give you a structured product that in the end you might find that your return can be around 13, 14. Now, for those that are always looking for opportunities, I say you should look out for this. There'll be more information, of course, at the go. Of course, it also means that you probably need to be banking with BNY Mellon or Standard Bank, which are both possible because as a as an African, if you have any African roots, if you have any African documentation, you can open a Standard Bank, Isle of Man, or Jersey account from wherever you are in the world, right? And so you'll be able to access this one day, have finished creating the product. But what am I saying? There are always opportunities. You don't always have to go for the highest risk possible. There are things that you can do. I see somebody saying hi. Hi, Charles. Thanks for stopping by. And of course, if you're watching, please just stop by. Just drop a hi. I'll be sure to respond. And then the next news, like I said, okay, we're going to be very short because I'm actually straining my voice. I just needed to show up. But if you're ready, if you're out of um, Africa and African in diaspora, we did like a short case study of how some three Africans were able to move beyond just real estate to other investment opportunities to secure their financial future and also not depend on their 401k or whatever it is in your country, or your retirement fund, right? To actually build wealth that will stand the test of time. So if that's something that speaks to you, Link is in the description box if you're a non-resident, and there's also a high earner clarity checklist also for those that are, regardless of where you are in the world, the things that you need to put in place to secure your finances as a high earner and all. Um, hi Judisco, thank you so much. Hi Iyolua, Iyola. Sorry, I'm always saying Iyolua. I don't know why, but hello. And so we're just going to go straight to Nigerian news. Now, Nigeria is where we're going to talk about today because the financial systems have been buzzing all through the week. And what is the news that so there was some CBN forbearance that was announced last week, or that was leaked, or whatever the information, we sure got it, where if you are getting any form of support from the central bank, you can't pay dividend, and then you can expand outside. You can't continue expanding. So we know some banks, for example, like Access Bank, that has been opening branches around Africa, which is fantastic. But for example, Access Bank has gotten some kind of forbearance from the central bank, and they're saying that if you do that, you can't open more branches, one, and you can't pay dividend, and that is significant because the Nigerian market is highly driven by dividend paying stocks, right? So let me explain what is happening. The first thing to note is that there's something called a prudential guideline, and you can Google it. It's on the CBN's website. The prudential guideline is basically how the central bank ensures that banks in all their activities stay prudent, obviously, because it's prudential guidelines. So they stay prudent. Why? To stay conservative so they don't lose their money. Now, understand this. The two things that keep a bank stable, there are two things. Check it. And if you have anything to add, let me hear. But there are two things that keep a bank stable. One, capital, and two, trust. If you don't have the two of them as a bank, you will go down. So capital is that, okay, you took a loan, or you gave a facility, the facility went bad. What is going to shock that loss is capital. Trust is that people believe that if they leave their money with you, they can come back and get it. The moment people don't believe that this bank will pay me back, everybody would come at the same time for their money, and the bank will go down, no matter how good that bank is. Why? Because you understand that when you put your money in the bank, it's not entirely in the bank. Somebody has taken that money as a loan. So if you come to the bank to say, if everybody comes to the bank at the same time to say they want all their money, the bank will not have it. So every bank depends on trust and capital to stay stable. Now, this prudential guidelines, hi Miriam, this prudential guideline is what bridges trust and capital, meaning people are coming to you to say that they believe in you as a bank, and so they leave their money. I, as central bank, I'm going to ensure that one, your capital is stable enough so that you don't destroy the trust that people have in you. That's literally what it is. Now, part of the things in the prudential guideline is things like single obligor limits, the maximum that you can give any entity at every point in time. Now, that single obligor limit is usually a percentage of capital, meaning that let's say the capital of the bank is 1 billion. Single obligor limit can be that you can't give one single person more than 10% of your capital at any point in time, meaning that the maximum any loan size can be in your bank is 10%. In the context of that 1 billion, that means you cannot give them anybody more than 100 million. Now, put it into context. Imagine like a Dangote wants to raise money and everybody feels like, okay, this deal is fantastic. They want to get on it, blah, 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 blah. So you can see all the banks trying to vie for it. The way single obligor limit is that the bigger your capital, the bigger you can give Dangote, the bigger you can make money from that transaction. That is how it works. So that's a single obligor limit. And there are other things in terms of capital adequacy, loan provisioning. I'm just going technical. But there are people in the bank, in treasury, balance sheet management, FinCon. That is what they do. They are tracking this prudential guidelines and the ratios and all that to make sure they are in line. Now, what is the problem here? The major problem is that banks give loans in dollars. And at the time when they gave those loans in dollars, dollar USD was at 400, 500, 600. Now, you were within your single obligor limit. You were within your single obligor limit when you gave that loan, and everything was fine. The loan is performing, the person is paying back, everything is fine. Fast forward to 2024, 2025, the loan that you gave that was maybe $400 random. In Naira, it was, for ease of math, maybe 1,000 Naira random. And then now that 1,000 is now 3,000. So you have burst your single obligor limits. The question is, whose fault is it? Is it your fault that FX moved? So a lot of banks are in that situation where they bust their single obligor limit because of FX. It wasn't because they were not prudent, but because there were things that were out of their control, and because their balance sheet is in naira. So the dollars amount given out is still the same, but their balance sheet has to be converted to naira. And so they had to go to the central bank to say, please bear with me on these assets, right? Because I'm over my single obligor limit, but there's nothing I can, like, we need to figure out how to manage this because it's because of FX. It doesn't mean the loan is not performing, right? Doesn't mean the loan, thank you, Charles, for that. It doesn't mean the loan is not performing. It's just because things have happened that are beyond my control. And every Nigerian has been impacted by the exchange rate move, right? So these are one of the major reasons why most of the banks that are even stable, you are saying, you are hearing that you are getting forbearance. And like, aren't they okay? What do they need support from the central bank for? The others, oh, there are some people that their own forbearance is the real one. There are others. But this is like the major issue. Now the question is, whose fault is it? Whose fault? Tell me, whose fault? Who is the? Do you get? And so the major thing here is that for some of these for some of these banks, while they're also raising capital so that their single obligor limit will go up, they are still in that process. But there's a case where some of them can now start calling in those loans and saying that the central bank needs us to call it in so that we, because how will we not pay our shareholders? If we don't pay our shareholders, our stock price is going to tank, it's going to be a mess, right? So this is really what is happening. Such that when people are like, oh, why did the central bank do this? I'm like, I'm just smiling because I'm a treasury person. I started my career as a treasury person. And even without, like, I sat down with the treasurer of a bank, a very big bank, like one of the top three banks. And I before he came in, I was like, oh, I was sitting down with another senior person whose company is listed on the exchange, the CEO of the company that listed on the exchange. And I was like, I'm very sure from my experience in treasury that this thing came from somewhere. It's not like all these banks intentionally went for forbearance. And as he sat down, he just said, ah, hola. But don't you know this? I'm like, oh, I didn't even think that far. So it's not like it's a bad thing, but the central bank is doing their job because there is a prudential guideline and everybody needs to stick with it. So everybody should resolve it, right? So everybody is doing their job. So it's not like there's a problem. I don't know if you get. CBN is doing their job by saying everybody stick to this thing. You can't be giving out. You have to resolve it. If you are not within limits, you can't pay dividend. You can't expand. It is right. On the other banks, on the other hand, the banks are like, well, part of this thing is not my fault, right? We're all in this thing together. So there will be a meeting ground. And I thought it was very important for us to actually understand, as against just thinking banks are being irresponsible or who even gave them this forbearance in the first place. Because if you go to CBN without the governor stepping in and making this hard line, the director would approve because they can see how it came about. That's literally how it happens. So it's just for us, and I think why these sessions are there for us to actually like understand how these things work. It's not just the media part, right? Um, but the interesting part, which is where I'm going to come to, is that okay, the first day stock prices tagged, but because the major people driving the stock market are experienced, they're research people, they're analysts, they understand. The stock prices just tagged, and they tagged one day, the following day they were up, and they've been bursting into new levels. And they've been bursting into new levels. So for we as lay people, right? I put it to you that this is why I would encourage you to share this link with your friends and stuff, so you actually understand. So that not that you would have woken up and sold your stock. Oh, these people are going to crash, and you sell. You now realize that the price, because GTB was 70, it's now 80 something, right? Just think about it, and all of them are trending in that same direction, doing the same thing. So this is why these sessions are important. So please share with your friend. And then the final news. Okay, before I mention the final news, we have an event, a workshop coming up. I've put it up. We have a workshop, a financial planning workshop. And basically, all I just tell you is that if you are working hard and in your company, you have a 5 year strategic plan, you have it cascaded into 1 year, into yearly plans, into quarterly plans. If you don't have that for your finances, I don't know why you've not signed up for this workshop. I don't know why you've not told your friends about it. So I've put the barcode there. It is basically just walking you through how to create a plan. Now, one of the things that we do is that before, when you sign up, you get pre-session worksheets, some activities that will just help you like gather all your data together to know where you are. And then during the workshop, we will build out a plan that would work. Someone has asked me that does it speak to if I was planning for retirement? I said yes, it's still the same thing. So that retirement and the amount you want to have would be the goal, and I will walk you through how to do it. So if you haven't, please check it out. The link will also be in the description. Share with a friend, follow us on social media, and just find out more. And if you have questions about it, drop in the comment section. Right, it is on the 28th, which is next week. Let me see if I have another one that is clearer. Yes, it's on the 28th. So you can sign up, right? And I hope to see you there. And then the final news, federal government is planning to link your credit scores to your NIN, your default, and it could impact getting a passport and other things. I think this is fantastic. I think this is so. Yes, I see what Yola is saying here. Another example of looking at the fundamentals and not act on one side of the news. Exactly. Thank you. That is something I always try to say. And and don't be a trader when you're an investor. I always say that. A trader is like responding to the news. An investor is taking things in stride and looking more objectively, right? Um, and then the final news is that yes, um, the federal government is linking your credit scores to your NIN. Now, if you're one of those people who has taken loan, you know the way you can register a line, get a loan from a loan app, and download, get the money, and then you won't now pay, and you drop the line. I think this is amazing. If they're able to pull this off, where there's actually a consequence of taking a loan and not paying back, people will be more responsible, and it will strengthen the financial markets. Because a lot of the reason why the interest rates are so high, apart from the fact that yes, central bank has taken up the benchmark rates and all, one of the reasons why rates are so high is because there's no trust. People cannot be held responsible if they choose not to pay. There's a limit to what you can do. And we have also seen that there's the extreme part where some people go very crude, and we don't want that as a society. So there must be structural consequences to a loan default. There must be things like in other climes, they will check your credit score to rent an apartment to you. That's how important it is. So I hope they're able to pull this off because it would strengthen the microfinance banks. It will strengthen that low level, like high impact credits. When I say high impact, somebody that just needs 100K to grow their business, right? But because the risk level is so high, they're charging them so high. But once you know that the person can be found, that there are things like you can't go to a public school without NIN. If your credit score, your parents' credit score is not good, you won't have access to this. Those are the things that we need to do. Or do you get? Once they do those kind of things, people begin to behave themselves, and that's where I hope we're able to go, because you see, a lot of the things that we see that are not in place is lack of financing. And so once people can get financing cheaper, things will just begin to change and you'll be shocked. So I think this one is laudable. So tell your friend to tell their friend if they are trying to be smart and all that. By the time they implement this thing, your smartness will be seen as official foolishness. I trust it was useful. I apologize. I'm going through a lot. My voice is struggling and I'm still going to speak. And I have another engagement in the evening, but we are pushing through. I hope you're able to hear me. I hope this was valuable. Don't forget that you can't outsource your health and your finances. You have to engage. No one can go to the gym on your behalf. and you'll be fit, and nobody can eat vegetables on your behalf and you'll be healthy. It's the same way you have to engage and also be a good friend and share this link with someone. Thank you and bye.